Bitcoin ETFs, they're past and coming this week, right? Not exactly. There's either a lot of confusion or a lot of misinformation here that we need to cut our way through. Starting with the context, it's been 8 years since the first of many filings for a Bitcoin ETF, the very first done by none other than the Winklevoss twins, and yet we still don't have one in the US to this day. Getting a true Bitcoin ETF passed could be huge for Bitcoin, helping it to potentially push its price over that magical $100,000 price point. And speaking of $100,000, a quick portfolio update. After Bitcoin's recent run, we're now sitting up 145% in the crypto buy alerts portfolio. If you'd like to subscribe to all my buy alerts and get additional content, you can join through the Patreon, link in the description below. So a Bitcoin ETF would push up the price of Bitcoin for several reasons. The first is public accessibility. Accessibility has been a huge talking point for crypto as a whole, and a lot of people feel for crypto, and in this case Bitcoin, to be adopted wholly, accessibility and UI needs to be improved across the board. And I have to agree with this. Sites like Coinbase make it very easy to buy crypto, but that doesn't mean that my grandma would be comfortable buying at this point. An ETF is a step in the direction of accessibility. It's a way for more investors to buy a share of crypto through ETFs by going through their favorite stock brokerage, which they're familiar with, and they get to effectively own crypto without having to worry about a Coinbase account or crypto keys. And second is IRA Moneyyy. While 17% of Americans own Bitcoin, 75% of Americans have retirement accounts. And there is a metric ton of money in those retirement accounts. And Bitcoin is just waiting for a slice of that pie. Now, I'm not saying, Nana should go and load up her entire Roth account with Bitcoin, but even 0.5% of IRA funds going towards crypto is enough to boost the market in a big way. And third is public opinion and sentiment. So over time, crypto has slowly gained more trust in broader society, and it still has a long ways to go. I mean, back in 2016, I'd be willing to bet that if a poll was sent out asking if Bitcoin was a scam, the majority of people would say yes, where today that answer would be far, far different. So ETFs and big stock exchanges hold a kind of prestige and respect by investors of all types. This credibility would help lend itself to cryptos if there was a true Bitcoin ETF. So this is great, right? We have an ETF likely to come this week, and this means Bitcoin will see a huge bump in price. Yes, but also no. This is where the confusion starts. First, the ProShares and Valkyrie Bitcoin ETFs, which are the ones likely to begin trading this week, are both Bitcoin futures ETFs. What this means is the ETF is not buying Bitcoin, but instead buying futures contracts on Bitcoin. And there's actually some interesting implications to this. A futures Bitcoin ETF won't actually always be the same price as Bitcoin. It will follow futures contracts, which can fluctuate in anticipation of future events. So for example, if futures traders believe Bitcoin will go down next month, a futures contract may trade at less than the price of Bitcoin. But now to the part that no one seems to be talking about, how these ETFs are settled. I keep on seeing it reported that these futures ETFs will help the price of Bitcoin because the ETF will simply buy Bitcoin if you buy shares of their ETF, which is possible, but that's not how ProShares and Valkyrie will do it. There's more than one way a Bitcoin ETF can be formatted, and it's really important to know the distinction. First is direct ownership. This is where you buy a share of an ETF and they buy the proportional amount in Bitcoin and they hold it in a cold wallet for you. In a futures ETF that has direct ownership, this is called physically settled. The contract requires you to hold and deliver the actual asset, in this case being Bitcoin. The second type is indirect ownership, or tracking of the asset. Here you could buy a share in a fund that simply tracks the price of Bitcoin without direct ownership. In the case of a futures ETF, like the Valkyrie and ProShares ETFs, this is called cash settled. Here, the ETF doesn't have to actually own any Bitcoin at all. They just need the relative cash value. And this is how Valkyrie and ProShares will do it. And frankly, I would have gotten this wrong myself had I not read their prospectuses. Here we can see straight from the prospectus, quote, "The fund seeks to invest in cash settled front month Bitcoin futures." And put even more bluntly, quote, "The fund does not invest directly in Bitcoin." So what are the implications of this? The ETF will not directly impact the price of Bitcoin. They are simply not buying Bitcoin, so this ETF cannot push the price directly. It just can't be done. It can have secondary effects that will benefit Bitcoin. The first one is hedging. So a popular strategy for investors is to hedge futures with the real asset. So these ETFs will make this strategy more accessible. Basically, you can decrease the risk in specific futures positions by also buying Bitcoin, which of course will help push up the price of Bitcoin if more people are buying Bitcoin. And an interesting side note here, this strategy can also be done by companies looking to use Bitcoin as payment, but they don't want the volatility of Bitcoin. If they hold both a short and a long position against Bitcoin, you have no volatility risk. And the second positive implication of a futures Bitcoin ETF is public sentiment. So ProShares and Valkyrie landing their futures ETF is just one small step in the way of credibility of cryptocurrencies. And we can see this in effect already as Bitcoin's recent price has shot up. Now, another point I'd like to make is there are already real Bitcoin ETFs who hold the actual asset. A Bitcoin ETF called Purpose Bitcoin recently got approved in Canada and is already being traded on the Toronto Stock Exchange under the ticker BTCC. However, the fund has pretty high management fees and they aren't easily tradable globally like a US ETF would be, so there's still plenty of room for improvement in this area. And on top of this approval in Canada, cryptocurrency as a whole has done a lot of maturing recently, with Bitcoin past a $1 trillion market cap again. Bitcoin futures have now been trading for more than 3 years and showing success. Many reputable platforms are now offering Bitcoin custody services like PayPal and Square, and many organizations are adding Bitcoin to their balance sheets. The SEC is finally saying that with the right regulations, a real spot Bitcoin ETF, not just futures, could be a possibility in the future. We're not there quite yet, but we're headed in the right direction. Gary Gensler, the chairman of the SEC, has recently spoken about his optimism for the future of Bitcoin ETFs, although he sees them being approved under the 1940 Investment Company Act, which governs mutual funds. This is different from most ETFs, as most applications have been filed under 1930s laws that allow stock exchanges to list as ETPs, exchange-traded products. Now, the difference here is there are much stricter rules and regulations for mutual fund laws. Now, this could affect the appeal of crypto ETFs both positively and negatively. Some might find the added security and structure more appealing. Others might feel like this is too much of a burden, as this would require more hassle and more oversight. Either way, for most people who are familiar with crypto, just buying crypto outright is going to be the best choice because there won't be any management fees buying crypto outright. But Gary Gensler has stated that he would like to see steps taken in investor protections before the approval of a true Bitcoin spot ETF, because right now he feels cryptos are the Wild West. Now, this doesn't stop him from having a positive outlook on crypto as a whole, though. Gary said that Bitcoin, quote, has been and could continue to be a catalyst for change in the fields of finance and money. And this gives me a lot of hope that the SEC will work with companies to finally push through a Bitcoin ETF with the proper rules in place. Kristen Smith, the Blockchain Association Executive Director, believes that Gary has both optimism for crypto and a deep care for investor protection, and with time will push through a true Bitcoin ETF. So now that we have our facts totally straight, the good news is that futures ETFs will likely help Bitcoin, but not quite as much as a true spot ETF would, and there's a whole lot of confusion going around, so make sure you share this video so people get it straight. And that's going to do it for today. Join the Patreon linked in the description for even more content. Check out BlockFi linked in the description as well to get $250 in free Bitcoin. I'd like to thank you so much for watching, and I hope you have a profitable day.